What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to break down what's going on with the overall market and how this may affect Tesla, what Jerome Powell just said that's very important, and what's going to happen during the weekend that will affect how Tesla moves for next week, alongside many other stocks out there. Before I break anything down about all the technicals, though, and talk about what's going on for this week and next week too, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Webull link down below in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, whether it's $1 or $100, it's up to you. You're guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is any could be a free Tesla share. The offer ends in just about 10 days, so check it out before they run out. With that out of the way, let's get on with the video. All right, so when it comes to Tesla, this thing was up about 1.84% for the day, holding up with some relative strength, and Tesla's looking quite nice right now. This was some very nice strength that Tesla developed ever since the shareholder meeting when Elon Musk made some good announcements. But the question is, how will Tesla move going into next week? And before I say that, let me just say one last thing I forgot to mention. I do apologize about the microphone quality and the setup in this video that's going to look different from normal. That's because my original computer has broken and I'm using a completely different PC just for now. Now, for the time being, I may continue to use this format for either a day or two, but very soon, either as soon as tomorrow or the day after, things should go back to normal. I should fix the big issues that developed. And this PC, once again, it still works. So I'm going to continue to use this, but I know for sure that the microphone quality is probably not as great. And I'm very sorry about that. But anyways, I'm going to keep making this video anyways. Tesla has developed a lot more relative strength thanks to the shareholder meeting. It's holding up nicely, but this nice move we're seeing it's very correlated with the market in a way because the market was pumping for the last couple of days too until today when the market sold off thanks to Powell, but Tesla held up. But here's the problem. Yes, it's great the market's holding up. It may even continue to rally, but whether it rallies or not will depend heavily on what happens over the weekend with the debt ceiling. And things are becoming a little bit more like what typically happens, at least for now. But if they, make a lot of progress in a short period of time, this could still be bullish for the markets. Let me just break it down in a couple of minutes. First, let's start off with Jerome Powell. What did Powell say? What did Powell do? Powell said that rates may not have to rise as much as expected to curb inflation. During the meeting, Powell was basically interviewed and asked many questions. A lot of this was just predetermined and he was prepared for it anyway. So he didn't say anything that was too contentious or anything too massive, but he did account for many of the fallacies in the Fed's practices of collecting data and reacting to data when it comes to their policies. What I mean by that is before, and this is something that Elon Musk talked about, when the Fed would look at data, they oftentimes would look at data that already passed many weeks ago. And Elon Musk and many others argue that the Fed's strategies are not working very well because they're looking at delayed data to make these policy changes. So Powell mentioned that the Fed is going to work more on getting the most up-to-date data and continuing to monitor the situation when it came to their next rate hikes. Powell said that there's no guarantee they're going to pause just yet. They have to wait for a lot more data. We do have a CPI report coming out in just a couple of weeks, and I think it's going to be right before the FOMC rate hike decision. Going forward, I know that the data is going to be a little delayed then, but they're also going to look at the current data for like June once we get there. And if there's any indication that inflation's going up and they start to see signs inflation's going up again and again, the Fed is going to be forced to raise rates again. They're likely not going to pause if we start to see inflation spiking up again. It already happened in Canada because of supply chains, right? Inflation is heavily dictated by supply chains. That plays a big role. And we'll see what happens until then. But one thing you have to remember is that Jerome Powell is keeping his word from this point. He said that the Fed is going to be prioritizing a 2% inflation rate. They're going to do what they can to get that, even if it causes some pain. However, Powell also said that for the markets, we don't have to worry as much about getting a potential massive spike in unemployment compared to previous recessions. Now, we could be wrong about that. He could be completely off, but he's saying that this is very like different from what previous economic theories, including like the Phillips curve back from like the 1970s, were saying. But what's different is he's saying that to get inflation down, we may not have to see a massive explosion in unemployment. Now, is he right? We'll wait and see. But historically, he's not entirely correct. I mean, we do normally see a big spike in unemployment to bring down inflation, to slow down aggregates demand. And it has to happen, but we'll see to what extent going forward. But other than that, most of what Jerome Powell said was in the middle. He wasn't too hawkish, not too dovish, just in the middle for the most part. He also hinted at the fact that rates may not have to raise as much as what many were expecting, but they're going to be reactive to data. So he was in the middle. It wasn't like too significant. And he said nothing that surprised me. But this is what's going to be a lot more significant. The debt ceiling is still going on and it's becoming a bigger mess. So in the beginning, okay, going back like earlier this week when the market started exploding on Wednesday, President Joe Biden met with Kevin McCarthy, and Biden said, at least those who were with Biden were saying that a lot of progress was being made. They're confident they're going to get through this. Biden said the same thing as well. And then, on Thursday, I think it was like Thursday, not Thursday, Wednesday at the end of the day, the news came out that Biden was going to cut his trip short from Asia, which caused the market to sell off a bit. But then after that, the market just continues to rip to the upside. I want to break down that for the whole debt ceiling right now, most of the sentiment has been more positive, but we're starting to see some negative things barely starting like now. And let me explain, okay? Mitch McConnell, Chuck Schumer, McCarthy, and many others were initially saying that lots of progress can be made. We should be expecting a deal around Sunday. It's very possible. And they're continuing to be open minded and willing to negotiate with both sides. That was good for the American people. That was good for the country. That is good for the stock market. That's part of why the market rallied the way it did. But here's the problem: a problem is emerging, and we're starting to see both sides beginning to argue more than before. Many people, especially some of the comrades of McCarthy, are saying that it's becoming more difficult to negotiate. There's been no progress, and this and that. And that's the exact opposite of what Joe Biden and many others were saying. So who's right and who's wrong? We don't know yet. I don't really like to pick sides. The best thing to do is just hope for the best, and we do not want to see a default or any Americans suffer because of this. Okay? But here's the thing, okay? If we get a deal done by Sunday, and that's what the market's going to be looking for, because we have another like conference about the debt ceiling for Saturday. But for Sunday, if we get the deal, if it's done, it's ready for Congress, the market is going to love it. The market could continue to rip to the upside for the short term. Okay, it's possible. If a lot of progress is truly being made, if the politicians are telling the truth about all of this progress, it could be good, right? Temporarily for the markets. But if the opposite happens, if we don't get a deal as soon as many of them are expecting, and they continue to argue it out, this could lead to a big rug pull for the markets. We could see the market tank very hard, and this could drag down Tesla. Now, what historically happens is they continue to argue until the last minute before securing a deal very, very late. They could even delay, the end date a little bit more because I believe there's some funding that exists that could keep the US government in function until like July. But the bottom line is, okay, the bottom line is it all depends on what happens over the weekend and early for Monday. Do we get a deal or do we fail to do so? Are they going to delay it or are they going to give us the deal we want? The market is betting. The market is confident we're going to get the deal. That's why the market is pumping. It's excited, but it could be wrong. And that's the risk in this market. The news is dictating the market like crazy. That's part of why, we can't always be correct on every single day perfectly. Sometimes unexpected pieces of news come out. And historically, when Congress argues about the debt ceiling on both sides, it's typically delayed, it's typically very slow, and it's typically very political. And so far, we haven't seen that, but we'll just have to wait and see what happens over the weekend. Now, as far as Tesla goes, let me just double check this. Tesla's offering some discounts on some of its products that are over $1,300. I'm sorry, discounts of over $1,300. Sorry about that, guys, for the Model 3 on their website. And that is some good, pretty decent news, in my opinion. We're seeing another discount right here on their website for the Model 3. I think this is very significant because when you look at the data for right here for the Model 3, this thing is continuing, this model is continuing to see these high inventory levels. The Model 3 is not as popular as the Model Y, and high inventory levels, especially during the summer, is not a good sign for the company. Tesla knows this, which is why they're offering a lot more discounts. I consider that a good piece of news, and I think they're going to work to bring up demand because there's clearly a demand problem. Now, is production playing a role in this? Sure, it is. Sure. Is supply playing a role? Supply chains? Yes. But that's not the only factor here. We're entering a recession and demand is going to slow down. That's what Elon Musk warned us about for the next 12 months. In his opinion, that's what he estimated. And that's affecting Tesla's ability to sell a lot more cars, or at least deliver as many cars as they produce. That is why the Model 3 has such a high inventory level compared to like earlier during the year when it was much lower in like the 2 to 400 range. It was actually around the 200 for many months, actually. And currently it's closer to about 800, a little bit over 700 as of right now. So that's why you got to cut these prices. That's why you got to offer more discounts. Tesla's trying to bring up the demand for the Model 3, and that is a good thing for them, in my opinion, because we want some good numbers for deliveries. And Tesla's willing to take the risk of making a little bit less from every single car to cut some margins a bit if it means getting more sales. And Tesla's willing to do so because it could help them spur more growth. One of the things you have to remember is that supply contracts could oftentimes be dictated by demand. Seeing demand continuing to grow for Tesla will incentivize them to continue to grow and get more and more products out there. And it's going to help them produce more cars because they're going to make more money off of them in a way. So when it comes to the Model Y, inventories are low right now, and this is still very good. They're going up just a little bit. They used to be about at around, what is this, like 56? They're currently at about 121. Nothing too major compared to like these spikes right here. The Model Ys saw a lot of price cuts, and they're still helping Tesla. And this tells me, like I said before in my previous videos, the data is looking very mixed for the latest deliveries report that's coming out. And I'll just be patient on it. I mean, Elon Musk did not give us the best of news for like the short term for Tesla. I mean, he said there's going to be pain and macroeconomic factors will affect them. But for the long term, he said Tesla's going to do better than ever before. So I'm still very bullish on Tesla long term. Short term could still see some constraints. Now, as far as Tesla goes, we have some good looking data. 135 million in volume is bullish news. Very strong volume on Tesla. We're getting lots of buying pressure. Short covering played a big role in why Tesla was pumping on low volume yesterday. But now the buyers are coming back. We're seeing algos buying into Tesla. The market was also getting bought up from many different algos for both SPY and the QQQ. And that's because the markets are anticipating some good news over the weekend. That does not guarantee they're going to be right, like I said before, but I just want to note it at the very least. Now, for the short volume, it's going up a little bit on Tesla relative to the price. We're seeing a little bit more shorting uh, for now, but what else is good about this is Tesla does not really care. It's not really being hurt by this. A lot of shorts got squeezed, at least over the last couple of days. The price price ratio is starting to uptrend, which tells us Tesla's gaining lots of relative strength compared to before. It's not extremely strong compared to like these levels up here, at least earlier during the year, going into like the end of last year, but there is an improvement, and that's a good sign for the company. Some more bullish news came out. Let me see if I can find it. Actually, no, it hasn't come out just yet. Wedbush is still bullish on Tesla. Uh, Going forward, from a seasonality basis, we tend to be strong on Mondays, and May tends to be a strong month. June is typically an even stronger month for Tesla, but I'm going to be very careful because of the debt ceiling. The news could dictate that and change how things move, anyways. Finally, if you look at the short interest, this was at 31 million Tesla shares shorted in just one day on the 12th, just about a week ago. And now it just dropped quite a bit. It did go up just a little bit just about 2 days ago. It's dropping a little bit for today, so it's very mixed. But like I said, when they close this many short positions, you tend to see Tesla pump the way it has. When you zoom out of Tesla, right, you could see that there's this gap right here. And I mentioned to you guys, depending on Powell, we could see Tesla try to fill this gap or not. I wasn't too sure. And if we got a break, a clean break and hold above 178, I told you we'd likely see Tesla go for that 180, and that's what happened. However, I also warned you guys that it could depend on Powell, but for now, Tesla held up very nicely. The market also held up. It didn't really sell off very hard. It was a very insignificant sell off after Powell spoke. And for now, the market is very optimistic. As the market starts dropping, okay, when the market started dropping when Powell was speaking, in real time, I saw lots of algos, lots of buyers stepping in. They're buying into the markets. They're excited. They think things are going to go positive for the debt ceiling. Could they be wrong? It's a possibility. Could they be right? It's also very possible. We just have to wait for the news. Now, as far as Tesla goes, there's another gap around 180. What is this? 183 on the daily chart. If Tesla continues to pump, if we get some positive news from the debt ceiling, we could see Tesla make its way up to about 183 plus. Now, the 200 EMA is on the daily chart. It's at about $198. Could Tesla pump that hard? It's a possibility if we get lots of bullish news. If we get like the debt ceiling deal done with and a bunch of things come, we could see Tesla pump that hard, but I'm not really counting on that just yet. I would rather look at these like next major resistance levels first before we talk about that. We have resistance on 189 and then 183, which is where the gap fill happens to be. We're going to watch those levels first if Tesla continues to pump off the debt ceiling. But if we get bad news, if President Joe Biden and many of the other congressional members are wrong, including like Mitch McConnell, if they're wrong about us getting a deal by Sunday, then we could see an opposite reaction. And that's the risk in the market right now. Tesla could get a rug pull alongside the whole market, and we could see Tesla come all the way back down to start filling some of these gaps below back to the 160s. A big rug pull could come if the debt ceiling ends up being much more complicated than expected. That's the risk in this market. It's very risky in some ways to just go, YOLO into just one side. You have to be very prepared to hedge and be very careful regardless. But this is a very nice setup. Now, one problem, excuse me, sorry guys. One problem I see with Tesla is there is a negative divergence developing right here, which makes me think there is a good chance we might see it sell off by Monday, but not a guarantee, right? I'm not guaranteeing anything. For now, this is just developing, right? And it is increasing the odds of us potentially getting a sell off on Tesla. Not a huge one, I'm not talking about a crash, just a slight sell off back to like 175, for instance, something like that. But it's all going to depend on the debt ceiling. So it could invalidate this technical formation if we get some good news. That's why the most important thing to look out for the weekend is going to be the debt ceiling. What happens? Do we get a good deal? Is the market still positive as we approach the deadline? If we don't get it, the deadline is coming, the market could still freak out. Okay? So that's what I'm seeing for Tesla for now. If it turns bearish, it's going to make its way down to 175. If that fails, then there's the 1 hour 200 EMA around this 170, then we have the 160 gap fill. If we get a bad reaction, if we get a good one, it could fly all the way up to 183 or even 189. On the QQQ, one thing I want to note is I'm not seeing the same negative divergence, but the trend is starting to favor the bears a little bit more after getting this crossover on the 1 hour time frame. And from a technical standpoint, it's looking weaker, right? A little bit weaker, not extremely weak, but just a little bit weaker. It was holding above the 50 EMA on the 30-minute time frame, and it's going to depend now on what happens over the weekend. If we get some good news, this thing could bounce and start, continuing to pump to the 340s. If it's bad news, it's going to make its way down to 330 flat. Let me just note that on the 1 hour, I believe it's either the 1 hour or you could use the 30-minute for this. We have a lot of imbalances. Why are imbalances important? Because the algos oftentimes have to adjust to balance the net flow. And what that means is, look at this imbalance like right here. So from like right here on my cursors, I know it's hard to see. I'm sorry about that. So like right here, and you also have the other ones here. That tells us that if we get a rug pull, if something bad happens, it's going to make its way back down to this level. Then we also have one right here. This is another big one, the 329 area. It's going to make its way down here if we get bad news over the weekend and also for Monday. Okay, so just be open-minded, be ready. I mean, I can't really predict it perfectly. I'm not a politician. I'm not even part of the deal or anything like that. But let me just also add that for the longer time frame on the QQQ, we still have a bearish divergence on the MECD that is developing. keyword is developing. I'm not saying it means we have to crash now. I never said that. I'm simply stating that this is still in the process of developing. And this is telling me to not fully trust this rally and that there could be major downside over the next few months going into June around that period. There could still be a lot of downside coming. It's very likely so far because this trend is still valid. The bearish divergences are still valid on the longer time frames. I want to make that as clear as possible. On SPY, we're technically seeing the same thing developing on the MACD. On the RSI, we have a double bearish divergence, so it's not as big as the MACD one, but it's still existent. What that means is, just like the QQQ, SPY could pump or it could drop for the short term, depending on the debt ceiling. For the medium term, the odds are favoring a big rug pull as we approach June based off these signals, just based off what these signals are saying, okay? Uh, if we pump like crazy hard, there's a possibility of us invalidating them, but for now it's not doing that. And these signals are still very valid, which is why I talk so much about them. But let's talk about the levels on SPY. I mean, if we're bullish off the debt ceiling news, SPY has the potential to hold 420. If we break 420 and hold it, it could fly to 425 to 426. That's the next major resistance. That's a big move to the upside to start filling some of these gaps if we get a very, very bullish outcome for the deal. If they fail to do so, if these politicians just argue it out and they just can't come to a consensus and the deal takes forever, this thing could get a rug pull and it's going to start, revisiting some of these lower levels. I'm going to look at like maybe the 30-minute time frame to double check any imbalances. I think it's very important to always check them just based off candles. We could make our way all the way back down to about, well, first off, we have an imbalance right here. Let me check it first. Right about here, we could make our way back down to about 415. And the next level is going to be 414 flat. That's going to align with where the 200 EMA is on the 30-minute time frame. So 415 basically. And then if that fails, then we could start dropping very hard to fill the gaps in like the lower 400s around like I think it's like 408 or something like that. But basically we'll make our way down to 410 or lower if we get a very bad piece of news, like a really bad one. If 415 breaks, and that's very likely if we just don't make much progress for the debt ceiling, because the US would be at risk of a default. But like I said before, I mean, the US, I'm not too sure about the June 1st dates that Janet Yellen was saying, because the US may have enough funds for like to survive until like July. But either way, I mean, the date that's set in Congress's mind is based off what Janet Yellen said, and that's June 1st. And I think that's going to be the bigger date. So we'll see what happens as we approach the date. And we need something done for the American people, for the public, and for the future of this economy. Janet Yellen warned us that if they end up defaulting on the debt, it's going to lead to a very severe recession. That's never happened, right? They always end up raising the debt ceiling, and they're most likely going to do it again. Almost definitely, they're going to do it again. But the real question is when? Could they get the deal on Sunday, or is it going to take another couple of weeks? Are they going to do it right before the deadline? We'll have to wait and see. Anyways, that's what I have for this video for Tesla. As far as my PC goes, I should have something better set up by tomorrow, hopefully, when I record the video. I'm not going to pre-record any videos today because I just know the audio quality is not the best, and I'll only do it if I'm like forced to do it if I don't have my PC ready by tomorrow. But anyways, things should improve in terms of my quality content by tomorrow, hopefully. And I want the best for everyone. Okay, so thank you for listening. Tesla to the moon is the long term is very bright. I have some merch for you guys if you're interested in buying anything. It should be around the comment section. And please don't forget about the Webull link. The offer ends very soon. You just put in any amount of money after signing up, whether it's $1 or $100, and you're guaranteed up to 12 free stocks. Thank you. Enjoy the weekend, everyone. Tesla in the market to the moon is the long term is very bright. And peace out.